Happy day, friends. So welcome to lecture number 7. So in chapter number 1, one subtopic was completed. So we are into the second segment of the same chapter. The chapter was insurance claims. So henceforth there won't be recap. I will just overall formality sake. We have the learning objective in this topic is computation of claim for loss of stock, loss of profit in a fire insurance policy from the viewpoint of insured. My dear friends, in that we have completed claim for loss of stock. 4-step approach. Step number 1, GPR. Step number 2, stock on the date of fire. Step number 3, the loss of stock. Step number 4, claim. So where average class applicability, firefighting expense, such aspects will be considered in computation of claim. Like that we had 4 steps, elaborate discussion, quite a number of problems we have solved. Here and there 1 or 2 sums unsolved, which is not included in our workbook. From study module you solve it. Later on you can keep revision test papers, RTPs, institute, other resources, you can take it for revision, not now. So simultaneously I would say if at all you want to solve few problems, it is sufficient if you do study module problems. There is no necessity for solving like no sir I will buy that book, this book, etc. My dear friends, the more the resources, maybe initially out of so much of anxiety and also the extra emotions and energy, we might gather so many resources. Over the time, once you start learning all the 8 subjects, we find it is extremely heavy. So institute resources highly sufficient, more than sufficient for you to face the exam. In fact, to secure 100 upon 100 only, the resources is sufficient. Only thing is, ignoring this resource, depending upon some other market resource is not at all required. There were times, maybe like some senior chartered accountant, your relative might tell you need to have like each subject to reference book and all. See, there were times like I would say up to year 2000, institute resources will be like some bunch of papers. From 2000, the last 20 years, there is, very particularly the last 5 to 6 years, there is no external market modules which is in par with the institute resource, my dear friends. So thereby, which is highly sufficient for examination. There were times where a student is expected to explore onto so many other books, my dear friends. Now it is not actually required. So there is huge coverage by the ICA modules, and wherever there is some insufficiency, we will, as a faculty, I would have taken the resources. So thereby, there is no need for additional books, whether it is theory, whether it is practical problems. Absolutely trust the study module. Try to learn from study module, because that's an institute approach which can be replicated in the suggested answers provided to the examiners who are correcting it. So thereby, please, my dear friends, just for no friends told, that person told, this person told, there is no need for additional books, right? Okay, anyway, coming back to this. So today we are going to focus on the second segment of this topic, my dear friends. It is claim for loss of profit. Claim for loss of profit. Claim for loss of profit. First of all, to make this claim that because of fire accident you lose profit, to make this claim a separate policy should have been taken. So first thing that you should be understanding is that it is not merely a fire insurance policy taken. Under fire insurance policy, a separate policy, loss of profit policy or consequential loss policy, like that a separate policy should have been taken, my dear friends. It is covered by separate policy. Covered by separate policy. It is loss of profit policy or consequential loss policy. So only if the business entity have taken a separate policy, then you get claim for the loss of profit. Anyway, so a separate policy should have been taken other than the loss of stock policy. A separate policy should have been considered. Sorry, that's the first point. Now, what is this claim for loss of profit? Sir, a fire accident occurred at my place, business place. What will I lose? Not tangible items and all can be lost, such as stock, furniture, building and all would have been lost. How comes this is profit lost? Let me put some questions to you so that you try to answer to me, my dear friends, as I believe that you are there and thereby you should also take it in the same manner. So tell me, my dear friends, it is how do we say, like, what sort of profit? Is it the profit earned prior to fire, or is it the profit after fire? What sort of profit we are losing, my dear friends, due to a fire accident? What sort of profit we are losing? What sort of profit we are referring here? Is it the profit prior to fire, or is it the profit after fire? You should have had the answer. Now open your mouth, spell out. You should have an answer. Okay, I presume you have conveyed some answer. I don't know how many of you say correct answer, wrong answer. Now let me now tell you the answer, because this is the way I do. It won't be like straight away I convey some answer, because I strongly believe in the active learning. I strongly believe in at the time of learning, a student should think, apply their mind, and that is how learning should be. It can't be like straight away I will tell 1, 2, 3, 4. That is how the classes take place. You can just compare. No, now the videos are available of every lecturers. So straight away step 1, 2, 3, 4 like that. That is not the way you should be learning. First, there should be some stimulation of thought process in you to undergo, like, no, why is this, how is this, like that. Then only it becomes so effective and it will be very conceptually reaching you. Anyway, coming back to this, so what profit? Naturally, when we say loss of profit due to fire accident, it has to be the profit after fire accident and certainly not the profit before fire accident. Sir, I lost furniture, that is how profit. No, that is not tangible item. When we say profit lost, it is only the profit after fire accident. You should not say that, sir, my P&L account destroyed, thereby profit within the P&L account destroyed. What is it? Profit is not within the P&L. That's a computation sheet. Anyway, coming back to this, my dear friends, mokka joke, coming back to the point that it is a profit after fire which is getting lost. Okay, sir, super. So because of fire accident, you are losing some profit after the fire accident, which you expect the insurance company to compensate, because you have taken a separate policy called loss of profit policy or called consequential loss policy. Like that, because you have taken that policy, you expect the insurance company to compensate you the profit that you lose after fire accident. Okay. Next question. Sir, how do you lose? Why do you lose profit after fire accident? Why do you lose profit after fire accident? So think. So when I post a question, it is not like waiting for me to answer. First you think, arrive at an answer. Now open your mouth, spell out the answer to the monitor, to the mobile, whatever instrument you are using. So don't think it is an instrument. I am standing in front of you. So tell me the answer. What is the answer? It is the question is like, why do you lose profit after fire accident? When I ask this question in a mega class of 800, no, I will get so many answers, my dear friends. So I will tell you, like, so the many of the answers what I receive predominantly will be like, sir, you know one thing, stock we lose and thereby profit is lost. Naturally, that's a perfect answer only. Sir, because of fire accident, we lose the stock, sir, and thereby we can't sell, sir, and thereby we lose the profit. Like that, some person will tell. Some people will tell, sir, it is because of the machinery has been damaged, sir, so thereby production cannot be made. Like that. Why that question comes from? Predominantly, so many of them will answer stock lost, thereby profit lost. Then I will post actually another question to them. What is that? Now, suppose in a business, there was no stock only at the time of fire. So, zero stock they had and they had a fire accident. So, can we say there won't be any stock loss? Yes, no stock, no loss. Sorry, can we say no loss of profit? There we can't tell. Even though you don't have stock lost, but still you have loss of profit. So, thereby it is not certainly stock lost. Suppose you saved all the stock and still you may have loss of profit, or you won't have loss of profit, still you have loss of profit. So, then they will tell, like, that machinery loss, furniture loss, building has been damaged. Like that, there will be several reasons they provide, my dear friends. Listen carefully. In a single word, you're all correct when you say like, no, these are the reasons why we lose the profit. So stock lost. So you know one thing, if you lost stock, I'm giving you money to buy the stock and which you can sell at a profit. So you can make the profit. But it takes some time, no sir. But still, whatever time taken, but you can make that particular profit. So ultimately, in a single line, if I want to tell you the real reason for why you lose profit is like, no, tell me which of the business activity gives you profit first of all. When you have so many business activities, which particular transaction gives you profit? Which particular transaction? Purchases, production, financing, administration, like that, so many activities. No, which activity gives you profit? Sales is the activity that gives you profit, and thereby the conclusion is very simple. You lose profit because you lose sales. You lose profit after fire because you lose sales after fire accident. That's all. It's a single word. Now, why do you lose sales? For that answer, whatever you are all conveying, that sir, stock lost, takes time for production, machinery destroyed, sir. Sometimes no, building got damaged, something like, no, say it's a jewelry shop. So a lot of jewelries are there. So fire accident came. So we try to save all the jewelry. Not even a single, smallest gram of jewelry was not lost. Everything was saved, but building got no heavily damaged. Now that no, suppose a very big building, so Joy Aluk or something like no, so big jewelry shops and all you have. So you find that suppose it is having some fire accident. Next day, they can't sell all those jewelry in the platform saying that this is only 1 lakh, 1 lakh, 1 lakh, 2 lakhs, 2 lakhs. Like that, they can't sell. So the point is that maybe some reason salesman would have been seriously have impacted by the fire accident. So they got injured. Maybe the machinery, the furniture, the building, stock loss. There could be so many reasons, but all these reasons leading to one single factor called loss in sales, and thereby you lose profit. So henceforth, somebody asks you, why do you lose profit after fire accident? Because you lose sales. Why do you lose sales? Then reason 1, 2, 3, 4, 5 you can tell. Is that clear to you? So which activity is affected? It is a sales activity affected, and thereby you lose profit. The sales is the activity that gives you profit. I hope you are following this. Okay. And when you say sales lost, I am not telling you cannot make even 1 rupee sales also. You make some sales, but usually if the fire accident have not happened, you expected some other sales to happen, some higher amount of sales to happen, but because of fire accident, you made little sales. That is why we say sales lost. Sales loss does not mean you didn't make any sales. Sometimes even after fire, next day you make sales, but it may not be the real quantum of sales which you expected if there was no fire accident. I hope you are following this. Like this conceptually, slowly you understand. So that my first question was like, no, which profit? My question was which profit? In the sense, is it prior profit before fire or profit after fire? Profit before fire. Profit after fire. Through this separate policy, we expect the profit that is getting lost to be compensated. So question is which profit? Adukku we are understanding, my dear friend, it is not profit before fire, it is profit after fire. Okay. The next question was why profit lost? Why profit lost? What is the answer to that? Those so many reasons you list out, but I won't say all those reasons. Those are all secondary reasons. Primarily, there is only one line of a discussion. Why we lose profit? We lose profit because we lose sales. Due to sales lost. Due to sales lost. I am telling you, my dear friends, if you listen to some other lecture like that I feel if this is the way it has been taken, no problem, but please don't learn a step by step number 1, step 2, step 3, step 4 like that. Please don't learn, my dear friends. Let's think like a layman and go further into this particular topic, my dear friends. Move into the terms and conditions of the agreement, etc. Let us learn from a layman's viewpoint. That's very important. So that is what we are striving hard also, my dear friends. So let us proceed to the next question now. So finally, what are we going to be getting compensated now? We are going to be compensated the profit on sales lost. It is a profit on sales lost. Profit relating to sales lost. So what is the compensation? If you ask me compensation, it is nothing but what? Profit on sales lost. Okay. Profit on sales lost. So thereby first you should compute due to fire how much sales you have lost. For that sales, what is the profit expected to be earned? That is what compensation. Correct, Abba? So thereby it is nothing but so two computation now. What is the sales lost and what is the profit on that sales lost? Sales they will not compensate, pa. What do they compensate? Profit only they will compensate. The profit lost on sales lost is how you should be understanding, proceeding further. Now my next question will be, my dear friends, is that what sort of profit will be compensated? What profit? Is it gross profit or net profit? Which profit will be compensated? Apply your mind. Like imagine you are in a very big classroom, you want to answer it. Open your mouth and now at least no, you need not have shy. At least open your mouth and spell out. So that daringness show in a, at least when we say 200 classroom or 800 classroom, we see substantially crowd. No, they will not open their mouth. Only few used to answer. Now you are sitting alone, na? So please open your mouth and spell out, my dear friends. So thereby, which profit are we losing? And later on you should tell, give me a feedback in the Telegram group stating that, sir, I answered, sir. And you only didn't hear, you didn't appreciate me. So okay, I am appreciating you. So now tell me, which profit? Is it the gross profit or is it the net profit? Which profit you lose? Which profit you want that to be compensated? Sir, in any insurance for that matter, what is getting compensated? Na? The actual loss a businessman suffer. Actual loss a businessman suffer is what will be compensated, correct? So thereby, if you analyze properly, my dear friends, so a businessman through their business earns what? Trading account, P&L account. So a businessman through their business, what do they take home? What do they earn? Is it GP? Is it NP? What do they earn? Because we want to know what you expect to be compensated, correct? So gross profit to be compensated or net profit to be compensated. So for that, a simple question is that, additional question on question is what does a businessman earn? And because of fire he lost it, and thereby he expect that to be compensated from insurance company. It's a simple common sense. So thereby, what does he earn? What does he take home? GP or NP? Some students used to tell both, sir. How come both? Say NP is only a part of GP. So thereby, either you should tell GP which is a higher figure or NP which is a lower figure. So is it GP or NP? It is a net profit. A businessman take home what? Net profit. So what do you expect the insurance company then to compensate you? Is it gross profit or is it net profit? It is gross profit. Sir, it is gross profit, because you would have arrived at the answer of net profit, my dear friends. I made you to arrive at the answer of net profit, but now I am telling answer is gross profit. Now I need only reason. Why is it gross profit? Why it is not net profit? So what is going to be getting compensated? Net profit or gross profit? Or gross profit. Sir, no, sir, net profit, sir. By the logic what you are telling, no, I am convinced, sir, it is net profit. Now I am telling no. Now it's not net profit, it is gross profit. Sir, how come that is gross profit, sir? I will tell you. So listen carefully, my dear friends. So it is not gross profit also. It is actually a net profit plus some amount. Net profit plus some amount. So I would say like this, my dear friends. So imagine we have trading and P&L. We have trading and P&L. So you have sales, say 10 lakhs. Cost of goods sold, it is 6 lakhs. So we have gross profit 4 lakhs. Gross profit 4 lakhs. Gross profit 4 lakhs. Now listen carefully, my dear friends. We have some expenses. We call this indirect expenses. Indirect expenses. So imagine, my dear friends, it is indirect expenses 2.5 lakhs. So net profit 1.5 lakhs. A simple trading and P&L account of a businessman, no doubt. If the fire did not happen, what I would have earned? I would have earned how much? 4 lakhs or 1.5 lakhs? How much I would have taken home? 1.5 lakhs. Because of fire, I didn't do business. Now I would have lost only 1.5. But I will tell you a problem, my dear friends. Say, why you lose profit? Because you are not doing the business. But even if you don't do the business, means what? You could not sell. You didn't sell. Which means you are not sold, you are not incurred this cost also. There is no outflow. Correct? So when you have not sold, you have not incurred the purchases also. Because it is a variable cost. This is variable, but this is also variable. But the point is, this indirect expenses, most of the expenses in P&L are fixed in nature. Most of the expenses in P&L are fixed cost. So rent, interest, major component of expenditure I am telling, rent and interest. So just because of there was a fire accident in our place, rent you will pay. Just because of there is a fire accident, you have to still pay the interest. Whatever loan you have taken from bank, for that you have to pay interest, correct? So these fixed costs, anyway you have to pay. Though I am not buying goods, though I am not selling goods, but if you pay me only 1.5, if the insurance company give me only 1.5, anyway I have to pay 2.5 lakhs to this landlord and the financiers, correct? So I have to pay this 2.5 lakhs to the landlord. 1 year I am not doing business. For 1 year I am not doing business. Still there is an outflow of 2.5 lakhs from my side. So the point what I am telling is that, so if the insurance company wants me to earn 1.5 lakhs, they have to give me how much? If the insurance company wants me to take home 1.5 lakhs, they have to give me how much? They have to give me this 1.5 plus whatever the fixed cost what I would have incurred even without operations. The fixed cost they have to pay me. So which means I want them to compensate me these two items. Which two items? This net profit of 1.5 which I would have earned, as well as there is a fixed outflow of 2.5 lakhs. So which means addition of these two is what I am expecting the insurance company to compensate me. So when you add these two, what is the amount you are getting? 4 lakhs. And which is nothing but what? Equal to dash? Gross profit. So only if they compensate me 4 lakhs, if they compensate me 4 lakhs, I will incur an outflow of 2.5 lakhs and I take home only 1.5 lakhs. But I can't expect the insurance company to pay their fixed cost to so many people and all. I insured it, so thereby they will give me two components. Actually, it is not GP or NP. It is NP plus fixed cost. NP plus fixed cost. In insurance language, it will be called as standing charges. It is called as what? Now slowly I am introducing them. See, like a layman, let us understand this. And then we will introduce insurance terminology. It is called standing charges. About what are we actually getting compensated from this policy? We are getting compensation in two components. What are the two components? Net profit and standing charges. Standing charges, fixed expenditure is what we call it as standing charges. Because sometimes it need not be exactly equal to this gross profit. So though in this problem, because there will be some variable cost also. P&L can have variable cost. P&L can also have variable cost. Say carriage outwards, salesman commission. Where it will come? Trading account or P&L account? Salesman commission. Salesman commission will come in P&L. So thereby you understand that there are certain variable expenses also. Because I don't expect that variable expenses to be compensated. Why? Because anyway, if there is no business, I am not going to incur that expenditure. Variable cost only if I do business, I will incur the expenditure. Correct? So thereby I don't expect the insurance company to compensate me dash cost. Variable cost. I expect them to compensate me only fixed cost and my profit. So thereby the definition is that I want what compensation? Net profit and standing charges. Net profit and
standing charges,
which most of the cases will be equal to dash
GP.
GP, but it need not be always equal to dash. gross profit. Substantially all the times it can be equal to the gross profit, not necessary every time it should be equal to the gross profit. I hope you are following this. So thereby this net profit plus standing charges, most of the times it will be equal to gross profit, but sometimes it may not be equal, but in spite of which we call this as gross profit only, we don't call it as net profit. The aggregation of these two items we call it as dash profit, gross profit, but it is not necessary exact balancing figure in the trading account. It need not be the trading gross profit. So if you ask me what will be compensated through this policy, I will henceforth say gross profit. Then if you want me to define what is gross profit, it is certainly not the balancing figure in the trading account. Then you should define the gross profit as dash plus dash. Net profit plus standing charges is what to be compensated. Understood? So apply the common sense. I've been asking a simple question, and let us try to derive this particular components, my dear friends. So initially my question was GP will be compensated, net profit will be compensated. You are about to tell net profit. I was guiding you to net profit. Then I told you the answer is gross profit. I am telling it is not a pakka gross profit. It is actually two components. Which two components? Net profit and standing charge. These two components, if you add, most of the times will be equal to dash gross profit. Sometimes it need not be equal also. Anyway, we will call it as, henceforth we call it as gross profit. But in this chapter, whenever you say gross profit, in this chapter, like in this topic, loss of profit policy, the moment you say gross profit, then immediately what is the definition that should come to your mind for gross profit? It should be equal to dash plus dash, net profit plus standing charges. Like that you should understand. I hope you are following this. So now coming to this, so what profit will be compensated? Gross profit will be compensated, but which is consist of dash plus dash, net profit and standing charges. I hope you are following this. Apo, this compensation, once again I am refining here the compensation. I am refining as it is gross profit on dash, gross profit on dash, sales lost. I need to find out sales lost. It is not sales, so it is there. So I was asking simple question. Sir, fire accident occurred. Yes, fire accident occurred. You lose profit. Yes, you lose profit. Which profit, sir? Profit after fire or profit before fire? Profit after fire. Why you lose profit after fire? Because we lose sales. Why do you lose profit? Because we lose sales. And why do you lose sales? Because you lose stock, you lose furniture, building, human, marketing department, like that, so many loss, and thereby you lose dash sales, and thereby you lose dash profit. Like that you should understand. So what is that you are expecting that to be compensated? Profit on sales loss. What sort of profit? Gross profit on sales lost is what you should understand. So compensation should be, I will take enormous time until we come to a proper understanding rather than formula. Dash into dash, formula alone you tell, sir. Actually, I need not take this many hours also. Straight away I can go to a formula, my dear friends, and that will be easy for you. Fast food type, so it can be easily completed in 1 hour also. I have seen like videos explaining the entire loss of profit in 30 minutes, makes attractive, but that's not the right way to learn. So try to understand the concept, like why this, why not this. That way you try to understand, because this is the only time you can learn like this. Before the examination, you can't start learning the logic. There you can still go with this step-by-step approach and all. And we will also provide steps, no doubt about that. The point is, initial learning should be with enormous application of mind, lot of thought process should be applied, then only you should be learning. You can't simply be absent-minded. So closely follow with the question, try to answer, apply your mind, fully be involved, then only you are understanding. So that this is the only thing which lacks in the student. Later on they feel I am forgetting. That's so the reason is that what, when they are learning like a formula. So when you try to grasp the concept behind it, then I don't think it can be easily forgotten. So coming back to this. So you have taken a policy for the loss of profit. It is not a fire insurance separate policy and all. Under fire insurance, you have taken a separate policy called loss of profit policy. In this policy, you expect dash to be compensated. You expect the profit that you lose to be compensated. My question was, which profit? Is it the profit before fire or after fire? Profit after fire. My next question was, sir, why do you lose profit, sir, after fire? Sir, after fire, I lose some sales, sir. Okay. Now, so thereby the profit attributable to, profit related to dash, sales lost should be compensated. So my next question was super. Now, which profit you expect to be compensated, GP or NP? Initially we understood as NP, but I am telling no, it is not NP. It is NP plus one more component, which is dash, standing charges. These together will generally be equal to the gross profit. Thereby we named it as dash, GP. So that way finally we told what is the compensation, dash on dash, GP on sales loss. This is how you should understand. I hope you are understanding. Anyway, proceeding further, my dear friends. So refining this compensation, still keep on refining until we properly understand the actual claim. I'm coming back to this. Next question is going to come. The question is, how long the compensation will come? How long the compensation you expect that to be compensated? Can we say as long as the period I lose sales? So how do you say? I mean, I told you sales lost means you expect some sales after fire and you could not make that sales. You made little sales or no sales and thereby you lose sales. That is how you understand. So thereby can we say as long as the period I am see the business is affected. So as the period that I take to restore the normal sales, so that many years they will compensate, mostly yes. So please you understand, primarily the compensation will be for the interruption period. We can call it as fire affected period, reconstruction period. So all these periods are to indicate that you that's a period that will be taken by the business entity to restore the normal business. So what is that called? Dislocation period, disruption period, fire affected period, interruption period. Like that, there is several names. Each problem will have different names. At the end of the topic, it implies the same meaning only, my dear friends. What is it? It is a period taken by the business to restore the normal business, is how you should understand. I hope you are following. Okay. So my question is, how long the compensation will come? So let's use one word, interruption period. But if you say the period that will be taken by me to restore the normal business, if you are the insurance company, I am the businessman. I was doing business and a fire accident came and I lost some profits. So I am coming to you every year. I am telling like it will take another, now my age is now 39, so I will take another 30 years to restore the business. So 30 years you keep compensating me. Every year I will come to you, or the insurance company, every year I will come to you, profit. So very happy because I need not do any business at all. I should simply ensure that I am not doing the normal business. So that many period, that many years you can compensate me? No, definitely not. You can't compensate me for that many period, my dear friend. So thereby you understand that there should be some limitation period. So that will be mentioned in the policy. We call that as indemnity period. What is that period? Indemnity period. So generally in the range of 6 months to 1 year, maximum of 1 year period. That indemnity period will never be more than a year, because a general insurance policy or a maximum period is only 1 year. So it will be in the range of say 6 months. It can be less than that also. It again depends upon the nature of the policy, nature of the insurance company, etc. So that is what we call it as indemnity period. So let me understand what is indemnity period. It is not 6 months or 12 months. It is a period mentioned in the policy. What is indemnity period? Period mentioned in the policy. But if I ask you, so for how long they will give you compensation? They will give you compensation for dash period. Indemnity period, you can't blindly say. Because sometimes no, you have mentioned as indemnity period 7 months. You have mentioned in your, you are the insurance company, na? You have mentioned as how many months? 7 months. But immediately after fire, within 2 months, I restore the normal business. And I am doing normal business. So you will compensate me for 7 months or 2 months? 2 months. 2 months only. So because I am losing my profit only for dash months, 2 months, so you will compensate me only for 2 months. But if I take 9 months, you will compensate me for 7 months. So that is how you should understand. So thereby, the compensation period, I'm going to define you, compensation period will be the dash period or dash period, whichever is less, whichever is lower. Which period? Indemnity period or interruption period, whichever is lower, is how you should understand. So thereby, it is now I am refining like this. Compensation should be gross profit on sales loss during dash period. Compensation period. I am naming that as compensation period. What do you mean by compensation period? Compensation period is the lower of indemnity period and interruption period. There can be various names that will be used in the problem, my dear friends. Interruption, dislocation, disruption, like the fire affected period, reconstruction period, several. I already conveyed 5 to 6 names and all. There are several names that will be used in different books, different problems, etc. So interruption period and indemnity period. So that is what you should consider. The lower of these two period is to be identified as dash period, compensation period, because that is the period for which insurance company compensate you. And in that period, first they will compute how much is the sales you have lost. Then sales will not be compensated. In that sales, what is the attributable profit? So I will not compensate you sales, my dear. I will compensate you dash profit attributable to that sales. By selling that goods, what profit you would have made, and the profit component alone, you would have made sales for 1 lakh. Now 1 lakh profit is 20,000. I will compensate you only 20,000. I will not compensate you 1 lakh. I hope you are following this. So finally, a small shape we have created. What is the compensation? What is the claim? Claim is nothing but dash on dash. Gross profit on sales lost during compensation period. So once again, it is gross profit on sales loss during compensation period. What is a compensation period? Compensation period is the indemnity period or the interruption period, whichever is less. Is how you should understand, correct? Okay, so listen, so what do you mean by indemnity period? The period mentioned in the policy. What do you mean by interruption period? That period that will be taken by the business to restore the normal business, correct? So clear? Pakka? Because instead of going for the, instead of given a big box, in fact 2-3 pages box of lot of definitions, etc. So let us understand the common sense approach in a layman way. Whatever the need comes, we will understand the meaning of such items, correct? So first I introduce the word, then after understanding the importance of the particular word, we are understanding the correct meaning of such items. I hope you are following. Shall we proceed? Yes. So which topic we are learning? We are learning a topic called claim for loss of profit. For this, it is not fire insurance policy taken. Under fire insurance, you should have taken a separate policy called loss of profit policy. It is also called as consequential loss policy. Okay. Now, under this policy, what will I be compensated? If you are met with a fire accident and because of the fire accident, if you lose dash profits, you will be compensated. So this is a compensation for the profit lost. Okay. Now naturally the next question is, which profits are profit after fire or profit before fire? Naturally profit after fire accident. Sorry. Next question was like, no, why do you lose profit? For that we are told you, we lose profit because we lose sales. The next question is, why do you lose sales? In fact, that question I have not written here. Why do you lose sales? So we lose. Again, these are all only common sense construction, like how we discuss 4 steps. No, similarly, I will dictate all the steps separately and we will write all those steps separately. Don't worry. This is just discussion for our general knowledge purpose or common sense way of learning that we are creating. But proper sequential manner, steps, formula, etc. I will provide you. Don't worry. Like how we normally follow in other books, etc. We will do it later. Now, coming back to this, my dear friends. So, why do you lose profit? We lose sales. Why do you lose sales? Stock lost, building lost, furniture lost, HR people lost, everyone lost, thereby we lose sales. And because you lose sales and thereby you lose profit. Which profit, sir? Actually net profit, but I also want one more component, sir. What component? Fixed costs, sir. Insurance language, what is it called as? Standing charges. So thereby you are expecting me to compensate what? 2 items, sir. Net profit and standing charges, which together we are going to call it as dash. Gross profit. Net profit and standing charges together we call it as gross profit. And finally we told you it's a gross profit on sales lost during compensation period, which is the lower of dash and dash. Indemnity period and interruption period. Shall we proceed further? Yes, okay. Now listen carefully, my dear friends. I'll explain a few other things and all, because there are several students who lacks clarity in these areas. See, you have taken a policy on 1st April. 1st April 2020 you have taken a loss of profit policy. Any insurance for that matter, any general insurance, my dear friends, will have a period of 1 year. Policy period, one year. But what is that expiry date? Expected to expire on 31st March 2021. See, if you have taken general insurance, you have bike, car, whatever you use, you go and take the insurance document. So, in your document, it will be very clearly mentioned from the date of insurance, not necessarily always on 1st April. It could be whenever you take. From that date till 12 months expiry date, but they would also mention midnight 12 o'clock, like that they would have mentioned. So, 1/4/2020 to 31st March 2021, midnight 12 o'clock, like that, because there should not be any controversy later on. So, on the date when it will expire, 1 AM, now what will happen? So, thereby very clearly mentioned. Okay. So, this is the period of coverage. This is the period of coverage, right? Okay. It is also mentioned, my dear friends, indemnity period. Indemnity period, it is mentioned as 5 months. The policy period is 12 months. Indemnity period is what? 5 months. The compensation period. Policy period is different from the compensation period. Indemnity period. What is the difference? I will tell you. First of all, I will explain you a scenario, my dear friends. Suppose, like 1st October 2020, there was a fire accident. What will be the maximum compensation period that you will be getting? So, imagine I am not providing you the information about the interruption period, the period that will be taken to restore the business. So, what is the period? From which date to which date compensation will happen? So, it will be for a period of how many months? It will be for a period of 5 months. So, what is the 5 months? October, November, December, January, February, March. Only 5 months. So, this compensation will be 1/10/2020 to 28/2/2021. That is 5 months. Like that, you should be understanding the compensation. Policy order, expiry date, what date? The policy's expiry date. When have you taken the policy? 1/4/2020. What is the expiry date? 31st March 2021. What is the indemnity period? 5 months. Interruption period I am not giving. That will be some large period. You can assume. So, suppose my dear friends, fire accident took place on 1st December 2020. Fire accident took place. Apo, what is the period? What is the compensation period? What is the compensation period? So, compensation period will be December, January, February, March, April. So, what happens? So, it is only for a period of
4 months.
5 months. 5 months. 1/10/2020 to 30th April 2021. So, you will be compensated 1/12/2020 to 30th April 2021. Now, I will put it third scenario so for your better understanding, because these are the areas students are not having the actual clarity, but still they will solve the problem. 8-step approach, 20 minutes problem. Okay, common sense how to apply. So, listen carefully, my dear friends. Suppose a fire accident occurred on 1st March 2021. Is this policy applicable? Yes, the policy is applicable. So, what is the compensation period? Because the policy expires on 31st March, my dear. So, thereby fire accident took place on 1st March. Here it is 31st March and here it is 1st March. So, thereby what is the compensation period? The compensation period will be March, April, May, June, July. So, it will be like 1st March to 31st July 2021. Compensation will be still there for a period of 5 months. So, please do understand, my dear friends, what does this 2 period indicate? The term policy period means it's a period during which the fire accident should have taken place. It's a period during which the fire accident should have taken place. That is what we call as a risk period or the policy period. See, after fire, always 5 months is applicable, which means suppose a fire accident occurred on 31st March 2021. Fire accident occurred on the expiry date. 31st March 2021, 11 o'clock night. 11 p.m. So, then the policy is applicable?
Yes.
Yes, still you will be getting a compensation for a period of 5 months. So, that is the difference, my dear friends. So, 5 months is like the period exactly after the fire. The maximum period after fire is a compensation. That period is what we call as indemnity period. I hope you are following this. Which means the point is your indemnity period need not be within the policy period. Your indemnity period need not be within the policy period. That is why we told you when I gave you the 112, you were actually hesitant to take a period after 31st March. But that's wrong. If the fire took place within that particular 31st March, then 5 months you are definitely be eligible for 5 months. I hope you are understanding.
Yes,
so what do you mean by the policy period? It's a policy, it's a period during which the accident should have taken place. Understood?
Yes, sir.
Okay, so that's how you should be understanding, my dear friends. So thereby, even if it is 31st March, still the policy is applicable. So I have already given you 2 periods, my dear friends. It's called the policy period, which is generally 12 months period. Indemnity period, which is in the range of 5 months to 12 months, it will be mentioned in the policy. I hope you are following this. So generally the policy period is 12 months. Actually, for problem solving, these things not required. That is why classes don't discuss this. What is relevant, that alone. So you understand step 1, step 2, that is sufficient. But you should actually connect to the practice. Otherwise, there is a purpose only getting 5 marks. For that alone you tell, I won't tell. That's not the way I believe in teaching. So that's how you should be proceeding also. Thereby, please try to understand, my dear friend, what is a policy period? Policy period means from the date of you paying the premium, generally a period of 12 months, over which dash should have taken place. The accident should have taken place. Suppose here you have taken a policy which is expiring on 31st March 2021. Fire accident took place on 1/4/2021. 1/4/2021. So whether this policy is applicable?
No.
No, the policy is not applicable. So 5 months, so 1 date not applicable. Unless you have taken renewed the policy. If you renewed the policy and you have taken 21/22, no problem. It's like your bike insurance only. So because you are riding the 2-wheelers, etc. So that way only you should understand, my dear. So here indemnity period not necessary, should be within the dash period. Policy period. It is always that many months after the accident, fire accident. Understood?
Yes,
that way we got a clarity set. So because these clarity lacks, and whatever we presently discuss is not necessary for solving problems. Because the question actually will give you compensation period. Anyway, but we need to understand the concept and all. So that way we try to understand. So what is the compensation? Once again, gross profit on sales loss during compensation period. So what do you mean by compensation period? It's a period during which I get compensation. Sir, okay, but how do you define that? Dash or dash, whichever is lower. Indemnity period or interruption period, whichever is less. What do you mean by indemnity period? It's a period mentioned in the policy. So what do you mean by interruption period? It's just the period that will be taken by the businessman to restore the normal business. I hope you understood this.
Yes, sir.
Okay, so close to 40 minutes we have taken. Still on to one line only we have taken. In this topic, we are going to learn GP on sales loss. Okay, which can be easily computed. So how do you compute the compensation? Will be computed as sales lost into GPR. Sales lost into, you have to compute something called sales lost multiplied by GPR will give you GP on sales lost. GP on sales lost during compensation period, which is computed as dash into dash. Because it is GP on sales loss, which is computed as dash into dash. Sales lost into GPR. So you have to find out what is the sales lost. You also have to find out what is the gross profit ratio, right? Like how we discussed the previous topic also. The first thing we'll be focusing is GPR. In this topic also, we'll be focusing on computation of gross profit ratio. Sir, how do you take GPR? Can you discuss those 5 steps what we discussed there? GPR given, take GPR as it is. GPR 2 or more GPR given, take average. GPRA not given, prepare trading account of previous year, arrive GP, then GP expressed as a percentage of sales. Abnormality eliminated, effect of price level changes should be considered. Like that several points we consider, correct?
Yes, sir.
But here slightly like we have a different discussion because the term GP is not the GP that we normally refer in our normal usage, which is nothing but trading account balancing figure, or you can explain as sales minus cost of goods sold. But here it is not that GP. We have a different definition for the GP. What is the different definition? So listen carefully, my dear friends. We are going to focus on the GPR computation first. The first thing we are going to focus is on what? Gross profit ratio. So we'll focus on that, correct? So what is this gross profit ratio? Gross profit ratio is equal to gross profit by sales into 100. Gross profit by sales into 100. So of which period? This is of previous year. Gross profit by, because fire accident took place this year, you try to find out gross profit of previous year, take sales of previous year and multiply by 100, you will get directly gross profit ratio. But my dear friends, you may have to take the trend here to arrive at current year GPR. So, due to the price level changes, you may have to adjust the GPR by say 1%, 3%, 4%, etc. I have already taught you how to convert GPR of 1 year in terms of GPR of current year, correct? So here accordingly you should be adjusting, but only thing is, my dear friends, you should be knowing one thing. Sir, what is GP? We'll take these two figures of which year? Current year or previous year?
Previous year.
Previous year. But what is GP now? It is net profit plus dash.
Standing charges.
Net profit plus standing charges. Net profit plus?
Standing charges.
What do you mean by standing charges?
The
Fixed cost. Whatever expenses covered in the P&L, generally fixed cost. So we call this as standing charges. Now let me tell you one more terminology here. It is insured standing charges. It is called insured standing charges. So that is how we consider, my dear friends. So it is net profit plus insured standing charges. So what does that mean, sir? I am not understanding. I understood standing charges, pakka, sir. Now what do you mean by insured standing charges? Very simple, my dear friends. Those standing charges means fixed expenditure. You know that businessman or a fixed cost, that businessman knows, correct? Now there is no necessary that all his fixed expenditure is covered in the policy. So what is insured standing charges? Now those standing charges which has been mentioned, covered by the policy. Mentioned in the policy. So is what we call it as dash charges. Insured standing charges. So generally what happens, like you have like interest, rent, depreciation. This is the major components of fixed cost. Interest, rent and depreciation, major components of standing charges. Then further other standing charges should also be considered by the terms of the agreement. Again, we can't restrict to in a classroom we can't tell this is the standing charge covered, this is the standing charge not covered, we can't tell, because it differs from dash to dash, policy to policy, company to company. So thereby it all depends upon. Let us understand the broad principle. So we are not going to learn that intricacies involved there. So coming back to this, so it is net profit plus dash.
Insured standing charges.
Insured standing charges. It's not merely standing charges. It is not all the expense of P&L. See, P&L will have so many expenses. So otherwise we don't take variable cost. We take only fixed cost. We call it standing charges. In standing charges also we take only dash charges.
Insured standing charges.
Insured standing charge. So what is insured standing charge? Those standing charges which has been covered, mentioned in the policy. Sometimes, sir, why is it then some expenditure not covered? Some expenditure not covered because it is not accepted by the insurance company. Suppose you are paying some interest from some illegal loans. What is illegal loans? Say there are several types of loans and all. Meter interest. In our regional language we call it kanduvati, etc. So like that, several interest you pay, then they may not accept that as a fixed expenditure. There should be some proper channel and all. I hope you're following this. Maybe like you pay salary and all, you would have like, you know, paying salary to your wife, paying salary to your son, like that you may pay salary and all, which they feel like, you know, it is just appropriation of profits. It's not salary. So thereby some expenditure they may ignore. I mean, they will not accept it. Sometimes what happens, you don't disclose the information to the insurance company. Because the more that amount is covered, now you may have to pay more premium, and thereby you would not have disclosed this to insurance company. So why some expenditures are not insured now? Either it could be insurance company not accepting it, or it could be that you have not disclosed it. I hope you are following this. Whatever you disclose, not necessarily it should be covered by the insurance company. Similarly, insurance company want you to take insurance for all expenditure, but you don't want to disclose few expenditures. So due to such reasons, some expenditure are not insured, and which we call it as uninsured standing charges. It is called as those of the standing charges which are not covered by the policy. We call it as uninsured standing charges. So we should not take uninsured standing charges. We should take only dash insured standing charges for the purpose of claim. I hope you are following this. So okay, so net profit plus insured standing charges is what we define as dash gross profit. About to find out gross profit ratio, go to previous year. Previous year financial statement you take. In that you take net profit. Then add dash insured standing charges. Now that when you visualize, my dear friends, your P&L might have gross profit, say 5 lakhs. You might have like, insured standing charges, uninsured standing charges. You may also have some variable cost, which is other cost. Then you have this like net profit. So say it is like some 2 lakhs. And this is like 1,50,000. This is 60,000. So this will be like 90,000 is the net profit. About what is net profit according to you? It is, what is gross profit according to this policy? You should take 90,000 and 2 lakhs. So you should be taking 2,90,000. So in this example, my dear friends, gross profit is equal to net profit plus insured standing charges. So 90,000 plus 2 lakhs, it is 2,90,000, which is not equal to this gross profit. That is why I told you, it's not the normal usage gross profit, but definitely it is much higher than the net profit. So thereby for this topic, we use the term gross profit, but it is not your normal gross profit. It is not a trading gross profit. It is a gross profit separately defined for this policy. So what is the gross profit definition for this policy? Dash plus dash. Net profit plus insured standing charge alone we will be compensating. We want to compensate fixed expense, but only if it is mentioned in the policy. There ends the matter. We don't compensate variable cost because anyway you are not incurring it. And uninsured standing charge you are incurring it, but you have to bear that particular loss because you didn't insure. So you insure this much, so that way we will be compensating you that. Understood?
Yes, sir.
Super. So proceeding. Now one more point is that, my dear friends, suppose we have some indirect incomes. Suppose your P&L will have like this: gross profit 5 lakhs, gross profit 5 lakhs. You have some interest dividend income 40,000. Then you have insured standing charges 2 lakhs. Uninsured standing charges 1,50,000, variable cost 90,000. So 5,40,000 minus 354.40. So it is like net profit is 1 lakh. Now what is the gross profit? Now listen carefully, my dear friends. In this net profit you have effect of this interest and dividend. In this net profit, you also have the effect of interest and dividend. You actually have 5 lakhs plus 40,000. 5 lakh 40 minus 3 is the item, then you got 1 lakh. But 1 lakh includes effect of both, correct?
Yes, sir.
1 lakh includes, net profit includes effect of both GP as well as interest and dividend. Now the point is, you don't expect the insurance company to compensate you this. But if you take net profit, it gets automatically included here. But you don't expect this to be compensated. Why, sir? Why we don't want compensation from insurance company? Because you are not losing it. just because of in our place fire accident occurred, our place. But we have deposited money in the bank. We have put money in some other company. We will get interest. We will get dividend. Even though we have fire accident, will they tell you have fire accident, we will not give you interest? Is it so? No. So we will get interest. Yes. We will get dividend. Yes. So do you want that money from insurance company also? No. So thereby that amount you will not get. So thereby you have to deduct those income. So thereby if you have indirect incomes, then it has to be net profit plus insured standing charges minus those indirect incomes. So in that case, in this example, how it will be 1 lakh plus
2 lakhs minus 40,000.
Minus 40,000. This is how you should be taking. So thereby it is 3 lakhs minus 40,000. It is 2 lakh 60,000. 2 lakh 60,000. This is how you should be calculating. I hope you are following.
Yes, sir.
So this is how you should be understanding, my dear friends. So if you have indirect income, how to react is also we explained, my dear friends. So we are defining gross profit ratio. Gross profit ratio equal to gross profit of previous year, sales of previous year, and multiply by 100, you will get gross profit ratio. What is gross profit of previous year? Na? It is a net profit plus insured standing charges of previous year, and you deduct this indirect incomes if any. That way you get the gross profit. Express that as a percentage of sales of previous year. And once you express the percentage, then it still represents only previous year GPR. So current year, because of price level changes, you may have to make some adjustment now. Then that adjustment also to be made. How to adjust we will discuss later on, my dear friends. We have already discussed elaborately in claim for loss of stock. So similar, in fact here we don't have such complicated adjustments and all. Here straight away some addition subtraction will be made. So why such addition subtraction we will discuss later. So coming back to this, we have steadily discussed the concept and we have just now understood how to calculate gross profit ratio. The base information will be what information? Previous year information. Previous year gross profit, previous year sales. What is gross profit once again? Dash plus dash. Net profit plus insured standing charges. You can use the other component of definition only if it is relevant. So generally it is net profit plus insured standing charges. But if you have this, then this also should be deducted. You should be knowing it. So that is only that is why we are discussing that particular point, my dear friends, because if you take the initial few pages of the study module, you feel only net profit plus insured standing charges. But you should know that if you have indirect income, then that should not be considered. You should take only the net profit and insured standing charge excluding this interest income. So this is already included in the net profit. So thereby you should deduct it. Understood?
Yes, sir.
Super. So this is how we should be understanding, my dear friends. Proceeding further. Having understood the base concept of gross profit equal to net profit plus insured standing charges, what we are going to do is that we are going to take question number 17. Though we have learned only one step, but straight away based on that step we are going to take this problem, question number 17, and we are going to solve. We are going to learn, first you are going to solve. You have case A, B, C, D, E. I want you to apply your mind, take 10 minutes, maybe 15 minutes, stop the video and keep trying. All the 5 cases you should try. So you should be solving each of these cases, find out GPR. Don't simply be lazy, my dear friends. Sometimes when the faculty is not there staring at the screen, and maybe because of this push some students will take calculator and do it. That also not sufficient. Take your notebook, take calculator, take pen, case here, read properly. Solve it as if it is a very, very important step in the examination. So I want you to solve the problem on your own. And you find, once case A, you are extremely happy, going to case B, suddenly you find, achocho, one doubt I come. Even though you feel a new scenario which I have not discussed, I want you to apply your mind, think something, I have not discussed this, think something and proceed. Suppose you have some loss situation, then how to handle the loss situation I have not discussed, and you apply your mind, do something. So please spend 10-15 minutes time, stop the video, keep solving it, my dear friends. So thereby please don't wait for the answer, and just because of sir case B loss is given, I don't know how to do, I will wait for the answer, I don't want to commit mistake in life. If you do that, if you apply your mind, something you do na, please don't tell I don't know, don't tell I don't know. This is the way you should progress, transform yourself. Please do it. I am waiting for 15 minutes now. 5 minutes over. Solve all the 5 cases, not one. Don't, just because after completing one, don't go with the solution. Don't go with the video. Complete all the 5. Have completed one, so let me now run through the video. Then I will take second one. No, complete all the 5. Show that gut, grit feeling, confidence. Last 1 minute, 12 minutes over. Hope all of you have completed. So I am now proceeding with this particular solution. I hope you have completed. All the 5 you should have completed. Don't resume this video without completing all the 5. Be ready with all the answer to all the 5 questions. Let's see then how you can work out. So please show that particular discipline, my dear friends. Sir, I don't know, do something and solve it. Okay, so let's now proceed, my dear friends. It's question number 17. Question number 17. Let me take case A. Case A, net profit, find the gross profit ratio in each of the alternative cases. Net profit 2,40,000. Turnover, the term turnover means sales. So we have told you sales of previous year, no? The turnover means sales, gross revenue is how you should understand, okay? Turnover of last accounting year rupees 40 lakhs. We usually compute based on the previous year. So turnover of last accounting year is 40 lakhs. Standing charges, out of which rupees 80,000 have not been insured, rupees 5,60,000, which means total standing charges 5,60,000. 80,000 they have not insured. Either policy they have not accepted it or we have not communicated. So thereby 80,000 uninsured. Total expenditure now 5,60,000. But what is that you understand? So total 560. Uninsured 80 na, remaining is fully insured. So how much? 4,80,000. So that is how you should understand. So thereby proceeding further, my dear friends, it is given sales, 40 lakhs, total standing charges 5 lakh, uninsured standing charges 80,000. Insured standing charges equal to 5,60,000 minus 80,000. Net profit given. These 4 data given. So we will find out first of all insured standing charges, which is total standing charges. Insured standing charges equal to total standing charges minus uninsured standing charges. 5,60,000 minus 80,000, which is equal to 4,80,000. So my dear friends, we have gross profit is equal to net profit plus insured standing charges. So it is 2,40,000 plus 4,80,000, which is equal to 7,20,000. Now listen carefully. GPR, which is equal to gross profit by sales into 100, which is equal to 7,20,000 divided by the sales figure 40 lakhs into 100. So it is 18%. Is the GPR. And since if no other information given, we know that this is GPR of which year? Previous year. And we always presume GPR of previous year is the GPR of current year. Understood? So though we are calculating this information based on previous year, but it is to be considered even for the current year, the same 18%. I hope you understood this.
Yes, sir.
Okay. So this is how you calculate the gross profit ratio, which is gross profit by sales into 100. Gross profit is equal to net profit plus insured standing charges. And what is that insured standing charges? Now, total standing charges minus uninsured standing charges as per this particular question. I hope you all understood. Pakka?
Yes, sir.
Proceeding further to case B. So, copying base. Earlier things are copying, nothing is there. Even if you don't write anything up to this, no problem. So we are proceeding with case A. Case A order copying slide is what we have taken. Now let me proceed further. This is copying slide of case A. Okay. Now proceeding to case B. My dear friends, as far as case B is concerned, it is given net loss. Turnover is 40 lakhs, standing charge 80,000 and 5 lakh 60. All other things remains the same. It is net loss of 2,40,000. Given net loss 2,40,000. Sales 40 lakhs, total standing charges, uninsured standing charges, $80,000. Idella given. Listen carefully, my dear friends. In case of net loss, GP for this policy is equal to insured standing charges minus net loss into insured standing charges divided by total standing charges. A formula to be applied. In case of net loss, gross profit is equal to insured standing charges minus net loss into insured standing charges divided by total standing charges. You can learn this like a formula, but I will try to explain you the logic. But slightly complex to comprehend. Let us try our efforts, take the efforts, and most of you can easily understand. Some of you feel like then you can still stick on with this formula approach, my dear friends. So listen carefully. See, to demonstrate yellow lines used in Ale, that is concept area. We have sales, say 10 lakhs, some different number, not this question. Cost of goods sold, cost of goods sold. So we find cost of goods sold equal to say 6 lakhs. Our gross profit will be 4 lakhs. Gross profit is equal to 4 lakhs. Now listen carefully, my dear friends. Then gross profit is equal to 4 lakhs. Total standing charges. Imagine we have only insured standing charges. We have only insured standing charges to the extent of 5 lakhs. All the standing charges are insured. What is the net profit? Net profit will be, you will be having a net loss here. Net loss of 1 lakh. You expect the insurance company to compensate you what abdina? Net profit plus insured standing charges. Now here one more point, common sense you should be understanding. What loss you are actually suffering because of fire, that is what you expect the insurance company to compensate you. Whatever loss you suffer because of dash, fire accident, that too only you expect the insurance company to compensate you. Correct appa?
Yes, sir.
Seri. Appo, suppose the fire did not happen, na, then you would have made a sales of 10 lakhs. You have an outflow of 6 lakhs. So how much cash you will be having? 4 lakhs. Of which you would have spent how much? 5 lakhs. Appo, you will be ending up in a negative 1 lakh, correct?
Yes.
Which means if the fire did not happen, your business would have given you money to bear this fixed cost only to the extent of 4 lakhs. If the fire did not happen, your business would have given you money to bear the fixed cost only to the extent of how much?
4 lakhs.
4 lakhs. But your fixed cost is how much?
5 lakhs.
5 lakhs. But anyway, a part of this fixed cost you have to bear out of your pocket. Even if you do business, even if you do pakka business, your situation is such a manner that your business can contribute. This is called contribution. Sales minus variable cost, we call it as contribution. In costing language, you will learn more about this. I don't want to bring now costing, contribution, etc. Your business can generate only 4 lakhs funds to meet your fixed cost of how much? 5 lakhs. Which means even if you do business also, your private resource you have to spend to the extent of how much?
1 lakh.
1 lakh to meet this particular. So first of all, in this scenario you are having a net loss. No, you should understand what is this net loss position. It is the expenditure over the business profit. It is the expenditure over the business profit is what resulting as net loss. Correct appa? Here it is 5 lakhs minus 4 lakhs, 1 lakhs. No, which means you are incurring more fixed cost than what your business can contribute. Correct?
Yes, sir.
But the point is what? We will compensate you. Here first of all, do you have any profit to take home? No. So there is no concept of compensating you profit. Actually there are two components of compensation. Net profit and dash. Insured standing charges, provided you lose these two because of fire. Correct appa? Now here what you should understand is that anyway you are not going to make net profit. You are not going to make net profit. So we are not going to give you any profit compensation. Sorry. But what about insured standing charges? So that we will compensate you provided you lose that because of fire accident. But here you should understand, my dear friends, if there is no fire, business would have given you only how much?
4 lakhs.
4 lakhs. Appo, due to fire, that to that particular 5 lakhs, we can also give you only 4 lakhs. That is how you should be understanding. I hope you are following this. So thereby, we should be considering that particular 4 lakhs as a compensation. We should give only 4 lakhs, which means first of all, there is no profit. But insured standing charges is there. Correct appa? The insured standing charge I will compensate you to the extent of 5 lakhs. 5 lakhs minus how much? net loss into insured standing charges divided by total standing charges. In other words, here in this particular example, insured standing charges and total standing charges remains the same. So I will be deducting 5 lakhs. Anyway, you will have a deficit of 1 lakh. Anyway, you will be having a deficit of 1 lakh. That is what I am deducting. So thereby, we will be compensating only how much? 4 lakhs. In this example, if you analyze properly, it is this amount minus loss I will be compensating you.
Yes, sir.
This amount minus loss only should be compensated. Understood?
Yes, sir.
This amount what? Insured standing charges. Insured
Standing charge.
which you would have got from business and thereby you will pay, but because of fire no business, so insurance company, you expect the insurance company to compensate you, correct appa? But even if there was no fire, but you would have had a deficit of
1 lakh.
1 lakh which you have to bear, and it is not lost because of fire accident. Because of fire accident, so you are losing only how much? 4 lakhs is what you should understand. Apply common sense. So actually if you do business, you will get a contribution of how much? 4 lakhs, and you are incurring an outflow of
5 lakhs.
5 lakhs. So thereby, anyway, even if fire accident does not happen, unga veetlende, from your home, you should bring how much? 1 lakh to pay that particular interest and rent you have to pay, correct appa? But because of fire accident, you should not expect the insurance company to compensate you 5 lakhs. So they will compensate you only how much? 4 lakhs. I hope you are following this. And the 4 lakhs are computation is very simple. Total expenditure minus deficit. Total expenditure minus deficit. It is that portion of standing charges which you cannot recover from insurance company. That is what you should deduct. What does this loss represent? This loss represent that portion of expenditure which is not recovered from the business profit.
Yes, sir.
What is this 1 lakh? This 1 lakh is a part of 5 lakhs.
Yes, sir.
So it is nothing but that portion of expenditure which anyway you would not have recovered from business. So that I will not compensate you is what we are telling. So I will compensate you 5 lakhs minus loss. 5 lakhs minus
Loss.
So thereby you try to understand the formula first. It is standing charges minus loss.
Loss.
Standing charges.
Minus.
That to what standing charges? Insured standing charges minus loss. But say in this formula you applied some proportion, no, insured standing charges to the total standing charges. Insured standing charges to the total standing charges. In the formula, okay, I will bring you logic, my dear friends. As I told you, this is not so easy. Mathematics not properly followed, na, it's not so easy to comprehend. Let me tell you the logic for that formula. Suppose you have sales 10 lakhs, cost of goods sold 6 lakhs, gross profit 4 lakhs. Now you have gross profit 4 lakhs, insured standing charges, then you have uninsured standing charges. Insured standing charges, my dear friends, it is 3 lakhs. Uninsured standing charges, it is 2 lakhs. Your net loss how much?
1 lakh.
1 lakh. Okay, now listen carefully, my dear friends. So first of all, you are anyway incurring a total standing charges of 5 lakhs. Now your business is contributing you only 4 lakhs to bear this particular 5 lakhs, and thereby you are anyway incurring a loss of 1 lakh. So you should properly follow. So you are incurring a loss of how much? 1 lakh. So don't focus on the numbers. Try to understand the concept. So there is a gross profit of 4 lakhs. You are incurring an expenditure of 5 lakhs. You are having a loss of 1 lakh. Correct? Now what did I tell you? You are expecting at least this expenditure to be compensated. Anyway, you don't have profit, but you want expenditure to be compensated. You can't expect total standing charges. You expect only insured standing charge because this is not covered by the policy. So thereby you expect only how much? 3 lakhs. But the problem is that you should be knowing that I should not take 3 lakhs minus 1 lakh. Why, sir, I should not take? Because, why first of all I should deduct loss? Because anyway there is a deficit from business. This is a deficit from
Business.
business. So, which is an under recovery of this expenditure from business. Correct?
Yes,
But the problem is this 1 lakh will have the components of both insured standing charges as well as uninsured standing charges. You will have components of both insured as well as uninsured. If I want to take in this 1 lakh, what portion of insured standing charges is reflected? In this 1 lakh, what portion of insured standing charges reflected in this 1 lakh? That portion alone I should be deducting. Why is it so, sir? Because anyway this amount is not going to be compensated. Correct, appa? Uninsured standing charge is not going to be compensated. Appo, then in this 1 lakh, whatever uninsured standing charge common included, we are not at all worried. We are worried only about, see, first of all, take this example. In the example, all the standing charges are insured. This entire 1 lakh represent a recovery, a deficit towards this insured standing charges. Correct?
Yes, sir.
So thereby 5 lakhs minus anyway under recovery from business I am deducting. Correct?
Yes,
now here you have insured as well as uninsured. This 1 lakh loss represent under recovery of dash and dash. Insured as well as uninsured. Correct?
Yes,
Seri. Appo, when you are going to give me 3 lakhs, which is only insured standing charges, from this you can deduct only the deficit attributable to insured standing charges. Some students suddenly might feel, no sir, uninsured we should be deducting it. No, uninsured compensation we are not taking. Appa compensation what you are taking, anyway there is an under recovery, no?
Yes, sir.
That under recovery proportion you should calculate is what we are telling. First, what is this? Is the under recovery of expenditure.
Yes, sir.
What is net loss?
Under
Recovery of expenditure. So when you have under recovery of expenditure, then that should be proportionately calculated to find out what is attributable to insured standing charge. About how to apply insured standing charges divided by total standing charges. None of the books have explanation about this. No logics about this. Everybody explains the formula. And now you are getting an opportunity to learn the concept behind it. In spite of all these things, still my brain is not reaching at that level, no problem, then stick on with the formula only. It's not a mistake. Then over a period, maybe after 1 or 2 months when you learn certain other chapters, suddenly this particular concept can be linked to you, connected to you. So, but from my side, even though I know that when I explain this, maybe a bigger crowd feel difficulty, but still I will teach. The point is that concept is very important. I hope you are following this. So thereby we are trying to understand, making you understand the concept. So first of all, what is this particular loss representing? Loss is representing a deficit towards the expenditure, which is anyway will happen in business. It is not happen because of fire. So, if you want the expenditure to be compensated, but some portion of that particular expenditure, anyway you will be losing it and not because of fire accident. Correct, Appa?
Yes.
So, I want to compensate you only those items which you lost because of fire accident. Appo, insured standing charges minus loss proportionately calculated attributable to insured standing charges. Understood? That is how you should be applying the formula. One line formula is very simple. In case of net loss, gross profit is equal to insured standing charges minus net loss into insured standing charges divided by total standing charges. Suppose this calculation is resulting into negative, then no compensation. Then no compensation. Suppose this net loss is very huge. This net loss is huge amount that in such a way that if you deduct this amount from insured standing charges, this overall amount becomes negative, then no compensation, zero compensation. I will tell you logic and alpha. It is very simple. Such situation when it is possible, no. Business is making gross loss. Business is making gross loss, which means you are buying for 100 rupees, selling for 90. Which means your business is not generating even 1 rupee towards your expenditure, fixed cost. Even if fire did not happen in your business, you don't have any contribution towards your fixed cost. Even without fire, you are paying your fixed cost out of your private resources. Understood?
Yes, sir.
Thereby there won't be any compensation. I can put it this way. If the business is having straight away gross loss na, there won't be any dash compensation. Understood? But if the business is having gross profit but it is dash net loss, business is having gross
Profit.
but it is net loss, then the computation will be it is dash minus dash insured standing charges minus net loss into insured standing charge divided by total standing charge. First of all, net loss nale under recovery of this expenditure from business, but it will have components of dash and dash, insured and uninsured, but I want only the under recovery towards this expenditure, and thereby it is insured divided by total standing charges. I hope you understand the logic.
Yes,
Understood?
Yes, sir.
Okay. Finally we understood in case of net loss, gross profit equal to insured standing charges minus net loss into insured standing charges divided by total standing charges. Formula explained, logic explained. Now we can solve it. Okay. So proceeding my dear. Case B or basic facts are there. I have explained you all the concept behind this. In your own words, in a statement form you can write. I have already demonstrated this. The demonstration I have missed it. So 1 lakh into it is 3 by 5. 3 lakh divided by 5 lakhs.
60,000.
So the answer would have been 2 lakh 40,000. Correct? 2 lakh 40,000. And GPR means 2 lakh 40 divided by 10 lakhs into 100. %. This is how we arrive at the answer for this particular question. So I hope you are following.
Yes, sir.
And this issue will arise, that proportion will arise only if you have some components of uninsured standing charges. If all your standing charges are insured, that concept does not arise. It will be straight away insured standing charges minus net loss, like how I demonstrated. So illustration number 1 or demonstration number 1, it is insured standing charges minus net loss. Here we don't have that particular formula application because all the standing charges are insured. But the moment you have insured and uninsured, means the loss also will have components of both insured as well as uninsured. That is how you should be considering. So proceeding further, Ippo case B or answer. Coming to case B or answer. Case B or answer is gross profit is equal to insured standing charges. Already we have taken. What is that?
4 lakh.
Insured standing charges 4,80,000. 4,80,000 minus net loss given in the question is 2,40,000 into 4,80,000 divided by 5,60,000. So 4,80,000 minus 2,05,714, which is equal to 286. 2,74,286. So GPR equal to 2,74,286 divided by 40 lakhs into 100. 6.86%. This is how you should arrive at that answer, my dear friends, for case B. So much of time spent, because usually we don't have this much patience and time to explain this in a like face to face and all, but online mode and recording mode, so we have time, no pressure of seeing students face etc and all. I feel like, genuinely feel like they are understanding, so that I hope you sincerely hear it again, one maybe first time, second time you hear it, definitely you will understand, my dear friends, right? So proceeding further, so the 6.86%. Going to the next one, case C. So we have just completed case B. Now proceeding to case C. As far as case C is concerned, net profit 2,40,000, turnover of last accounting year rupees 40 lakhs. Standing charges out of which rupees 80,000 have not been insured, 5,60,000. Special circumstances clause in the policy allows for increase in the rate of gross profit by 2%. like that information provided, my dear friends. So case C, adhe facts given sales is equal to 40 lakhs and net profit is equal to 2,40,000. Total standing charges 5,60,000. Uninsured standing charges 80,000. So insured standing charge is equal to 5,60,000 minus 80,000, which is 4,80,000. Now gross profit is equal to net profit plus insured standing charges. So 2,40,000 plus 4,80,000, 7,20,000. So you don't expect this to be very slow. This we can complete. So GPR, only thing is GPR of previous year is what we are calculating, is 7,20,000 divided by 40 lakhs into 100, which is equal to 18%. Now that for case C, some students would have arrived the answer in a different way. Now let me be very clear also. See, it has been provided that due to the special circumstances, the rate of GP to be increased by 2%. So thereby there is an increasing trend. There is an increasing trend. So which is or adjustment increased by how much now? 2%. So it is 20%. It is not 2% of 18%. See, a rate increased by 2%. Now it is not 2% of that percentage. See, RBI lending rate 10%. RBI increase the rate by 1%. Now it is not 1% of 10%. It is 10% plus straight away addition of 1%. Right? So thereby, please don't make out. Sometimes you have arrived. That is why I asked you to try, because if you haven't tried, suddenly the exam only will get this down. So I wanted you to think independently, separately, arrive at some answer, then you can understand the answer, etc. Because the case B or answer, most of you would not have arrived at, unless you would have gone through the study model, understand, etc. and all, you would not have arrived at the final answer. Then without explanation, why should I solve the problem? It's okay, break your head, no problem. Spend enough time during the initial learning time, my dear friends. Something that you have not come across, something you have not read, but if it is mathematics, if it is English, why don't you apply your mind? Why don't you think and arrive at some answer? Then you can correct yourself, right? So coming back to this, my dear friends, so thereby GPR of current year is 20%. You should not take 2% of 18. Any rate increase is always a rate directly deducted from that particular base rate, right? So that is how you should be understanding. We have taken case C also. We have completed case C. Proceeding to case D now. If from so far, I think you would have copied, maybe the copying slide, case A copying slide is this, number 1. In fact, I think I have provided case A, case B copying slide. This is just a demonstration, my dear friends. This was actually demo 2. Okay, so let's now proceed to case D and case E. Gross profit ratio of last year 25%, turnover for the last year rupees 10 lakhs, total standing charges rupees 2,50,000, out of which rupees 50,000 have not been insured. Okay, that's all. And already question is compute gross profit ratio. So listen carefully, my dear friends. Given of previous year given as 25%. Sales 10 lakhs. Total standing charges 2,50,000. Uninsured standing charges 50,000. This is the information given. Now listen carefully. Now first of all, what is the basic doubt? Sir, what are we going to find out GPR? Sir, GPR is given, sir. Nonsense question is this. Yes, GPR is given. Now I will tell you, my dear friends, unless otherwise mentioned, GPR means it is a GPR determined based on the trading account GP. It is a balancing figure in the trading account. And according to our policy, we have a different definition for gross profit. I repeat the point. A normal usage of GPR is not the GPR that we use in this topic. Which topic? Loss of profit policy. Not even in loss of stock. Loss of stock GPR na, it is exactly the normal usage only. Trading GPR only. But in this topic, which topic? Loss of profit policy, GPR is different. So, if in the loss of profit policy GPR given na, it is not the GPR what we require. It's a normal GPR, trading GPR. Understood? So, this is arrived based on the trading account balancing figure. This is not what we want. We want GPR based on what? The GP, which is determined as net profit plus insured standing charges. So, that is what we want as GP and in terms of GPR, correct? But whatever given in the question, you should understand is not the GPR what we require. It is a GPR based on dash profit. Trading account gross profit. Sales minus cost of goods sold. That particular gross profit ratio is what you should understand. Clear? Yes. So thereby you should not tell GPR given. Say take GPR as it is, like that you can't tell, my dear friends. So this is not the norm. This is a normal GPR, but we don't want this GPR. We want a different GPR. Did you understand?
Yes, sir.
Okay. So proceeding. So let's how to calculate this here. Very simple. We will find out according to what we need. Net profit plus insured standing charges. Adala correct, sir. Net profit not given, sir. Like in the previous questions, all net profit has been given. Oh, so then you should understand few things here, my dear friends. I have been explaining you the P&L format here. So if you take this normal format, you should understand that usually if you have P&L, then you have gross profit, then you have insured standing charges, uninsured standing charges, unless otherwise mentioned, no indirect incomes. So you take this net profit. So if you should understand the normal trading account gross profit minus insured minus uninsured will give you dash net profit. So in this particular problem, my dear friends, if you analyze properly, you find that so it is 25% of 10 lakhs. 25% of 10 lakhs. What is that? 2,50,000 is a normal trading account gross profit. This is a normal trading account gross profit. 10 lakhs into 25%. Understood? Sorry. What is the total standing charges? Total standing charges given as 2,50,000. So we understand net profit as nil. And this is actually called in costing, we call it as break-even point. Break-even point means no profit, no loss. So your contribution, that is gross profit, is sufficient to meet all the fixed cost. So that way net profit is nil. Sorry. Net profit is nil. So what is your gross profit for this policy? Your gross profit for this policy will be net profit plus insured standing charges. What is net profit? Nil. What is insured standing charges? 2 lakhs. So thereby you will take only 0 plus 2 lakhs, 2 lakhs. And that 2 lakhs you will express as a percentage of 10 lakhs. And that comes to 20%. I hope you understood. So this is how you understand. So you should understand a relationship, my dear friends. Unless otherwise mentioned, you should understand the relationship. Unless otherwise provided, trading gross profit minus insured standing charges minus uninsured standing charges is equal to dash net profit, isn't it? You should be understanding. Though I presented like this table and all, we will present in a statement form. So here first of all we understand trading gross profit equal to, we need to find a net profit, no? Net profit, adukku first trading gross profit is equal to 10 lakhs into 25%. How much is that?
2 lakhs.
2,50,000 minus total standing charges. Total standing charges given in the question. How much?
2,50,000.
So thereby net profit is equal to nil. Ipo gross profit for loss of profit policy. Is equal to net profit plus
Insured standing charges.
so what is net profit? Nil. What is insured standing charges? 2 lakhs is equal to
2 lakhs.
2 lakhs. GPR is equal to
2 lakhs divided by
2 lakhs divided by 10 lakhs into 100, 20%. I hope you understood this.
Yes,
so this is how you should be taking. So first of all, the confusion that arises. So GPR given, they are asking GPR, what is this here? Because the GPR in the normal usage is not the GPR that we use in this policy. So thereby use the GPR to find out the GPR what we require. Understood?
Yes, sir.
That's the way you should be doing. Now I will tell you, my dear friends, some students will apply themselves properly like this. Suppose when you have the breakup of these items, like 2 lakhs and it is 50,000 and thereby it is nil. There is an alternative presentation directly we can make. Trading gross profit minus, if you deduct uninsured standing charges, then automatically you will get these two components. Actually we want what? We want net profit plus insured standing charges. Apo, which can be arrived as, my dear friends, trading gross profit minus uninsured. See, all the three together is this amount.
Yes, sir.
All the three this amount na, then upon this amount la, if you deduct dash, upon naturally you will get a total of these two. So what is trading gross profit? 2,50,000. What is uninsured standing charges in this question? 50,000. About 2,50,000 minus
50,000.
you will get,
2 lakhs.
which is nothing but still gross profit for this policy.
Yes, sir.
So gross profit for this policy can be alternatively expressed as trading gross profit minus uninsured standing charges. Even though that is an alternative presentation, our institute module doesn't present so. Always they take it as net profit plus dash insured standing charge, because in the insurance terms, my dear friends, the gross profit is defined like this. Only for a computation convenience I have explained this, but we would like to stick on with our presentation. That is why I am not going to write this. Orally I am telling that particular presentation as trading gross profit minus uninsured standing charge. You can understand, but I want you to present like this because I don't want to differ from the material module presentation. Okay, so thereby we will stick on with net profit plus insured standing charges, and we arrive this particular profit of 20%. I hope you understood
Yes,
this.
sir.
Alternative presentation also understood?
Yes, sir.
Concept understood?
Yes, sir.
Okay. So copying slide. This is the copying slide. Okay, so finally we proceed to case E, the last case for this particular question. We are still on to computing gross profit ratio, my dear friends. Gross profit ratio for last year 30%. So ratio again given. What did I tell you? Ratio means what? GPR is this? Trading GPR. This is not the GPR what we require. We have a different formula. Okay. Turnover for last year 5 lakhs. Uninsured standing charge 25,000. Net profit 90,000. I think no other information given. That's all. 4A4 information given. So let's proceed here. How to compute this? It is case E. let's first identify what is given. GPR, we understand that as trading. What is the percentage? 30%. Sales 5 lakhs. Uninsured standing charges
25,000.
Net profit
90,000.
Okay. Now listen carefully, my dear friends. Here, if you analyze, suddenly you find that no, somewhere you are getting lost here because there is no information about insured standing charge. There is no information about total standing charges also. So then how do you find out this? So please listen carefully. If you analyze the problem, you know gross profit minus insured minus uninsured is net profit, correct?
Yes, sir.
So in this problem, question is giving you net profit.
Yes, sir.
90,000. Then trading gross profit is 5 lakhs into 30%, which is 1,50,000.
50,000, yes, sir.
Apo, the difference between 1,50,000 and 90,000 is what?
Total standing.
Total standing charges. Aggregate of these two, 60,000, you will get total standing charges. Correct? And out of which, uninsured standing charges is equal to 25,000. Suppose you can arrive at the insured standing charges. Actually, in an easy manner, you can take 150 and you can directly deduct this uninsured standing charges. But I don't want to make the presentation. When you have when you don't find no time for solving it, then technically you can complete that manner also, no problem. But I would recommend this presentation, and we have explained the concept also. Anyway, our presentation starts here. This is not our presentation, only for you to understand that difference between gross profit and net profit will give you total standing charges. So I am going to find out here the insured standing charges. So it is trading gross profit, which is equal to 5 lakhs into 30%, which is 1,50,000, and then we have net profit given in the question as 60,000. So thereby we understand the total standing charge is equal to 90,000. The difference between these two, gross profit, various expenditure will give net profit, correct? And accordingly we arrive this total standing charges as 90,000. And then you know insured standing charge is equal to total standing charges minus uninsured standing charges. So 90,000 minus
60,000 minus 25,000.
Net profit is 90,000.
60,000.
So which is 35,000. So now my dear friends, gross profit for our policy is equal to net profit plus insured standing charges. So it is net profit 90,000 plus insured standing charges 35,000. So it is 1,25,000 is the gross profit, and then gross profit ratio is equal to 1,25,000 divided by 5 lakhs into 100 gives us 25%. I hope you understood this. So gross profit ratio is equal to 25%. Now alternatively, I told you directly only you could have from 1,50,000, if you directly deducted uninsured standing charge given in the question as how much? 25,000. So you will directly get gross profit as 1,25,000. Only thing is you should know, even though from gross profit you deduct one number, but the resulting number is also gross profit only. How come, sir? Both the numbers are gross profit. The first gross profit is a trading gross profit, and the second gross profit is the gross profit that we require for this policy. Which policy? Loss of profit policy, consequential loss policy. Like that you should understand. I hope you are following. So that way we have completed case E also. Case E we have completed. We have elaborately learned various combination, various issues in relation to computation of gross profit ratio. I hope you all understood this, correct? So what if there is loss? If there is loss, then it will be insured standing charges. That is, gross profit is equal to insured standing charges minus net loss into insured standing charges divided by total standing charges will be giving you the gross profit. Once again, when you have net loss, how to calculate gross profit? It is equal to, it is insured standing charges minus, because loss na, there is no profit element. What are you expecting compensation? But two things, net profit and insured standing charges. When there is loss na, no compensation. But you need to get compensation for the insured standing charges. No, that is what we are telling. We will be compensating you insured standing charges. But after deducting a deficit which anyway would have happened in business. After deducting a deficit which anyway would have happened in business. Understood? That is how insured standing charges minus insured standing charges. Net loss into minus net loss into insured standing charges divided by total standing charges. Like that we applied one particular application. So once again, if there is net loss, how to apply? It is insured standing charges minus net loss into insured standing charge divided by total standing charges. Suppose in that business there is no uninsured standing charges now. There is no uninsured standing charges. Then it becomes so simple. It is insured standing charges minus net loss. Minus net loss. Only if you have uninsured standing charges, then that particular proportion application will make some sense. Otherwise, that there is no difference between insured standing charges and total standing charges. Correct, Appa? Only when you have uninsured standing charges, then there is difference between insured and total standing charges. Otherwise, insured the dash total standing charges. Like that, you should understand the concept. Business has gross loss, na, there won't be compensation only. If the business is having gross loss, then there is no compensation only. Is there a reverse compensation, like no, like I should give something to insurance company, like that? No concept. We expect two components of compensation. What are the two components, sir? Net profit and insured standing charge. These are the two components. So net profit less a net loss. Appa, I don't want any compensation for profit, but for the expenditure you should compensate me. Other some portion will be deducted. Why I should be deducting that portion, sir? Why don't they compensate me full insured standing charges? Now, because you are not losing this fully because of fire. Even if you do business also, some portion you would have lost. Correct? Yes, business giving you 4 lakhs, you are incurring expenditure of 5 lakhs. Anyway, business giving you only 4 lakhs, you are incurring expenditure of 5 lakhs. Now, your private resource you would have lost by how much? 1 lakh. That I will not compensate you, is what we should understand. Common sense, concept, formula. Any of this you should apply. Understood? So we have taught you in the common sense manner. Anyway, this is the copying slide. I hope you have completed the copying. I think I have given you, or maybe one more time. Copying over. So these many areas are there. Trailer than completed. Lot more to be discussed under this particular policy. Loss of profit policy, claim for loss of profit policy. Anyway, what is this particular topic we are discussing? Which chapter we are discussing? We are discussing insurance claims. Under that, what topic? Claim for loss of profit policy. I explained you. If I take fire insurance policy, this compensation I will get down. No. You need to take a separate policy. Loss of profit policy. Okay, sir. I took policy. What do they compensate me? Whatever profit you lose, that amount will be compensated. Okay, sir. Which profit, sir? Is it the profit I have already earned before fire or profit after fire? Profit after fire. Naturally, profit after fire. Okay, sir. Now, when you say profit after fire will be compensated, my next question is, why, sir, normally after fire businessman lose profit? It is because the businessman lose dash sales. So, because the business entity lose sales, we lose profit. But thereby compensation will be on profit on dash sales loss. Okay. Next question was, which profit, sir? Gross profit and net profit. Logically, if you think, what profit I take home? Net profit. That only should be compensated. But I want another item also, that is fixed cost, standing charges. So thereby, I want two things to be compensated. So provided it is mentioned in the policy. So thereby, what are the two things? Net profit and insured standing charges. When you add these two amounts, generally it will be more or less equal to the normal gross profit. It need not be always equal to normal gross profit. Correct, Appa? Anyway, so thereby we named for this policy that aggregated number as dash gross profit. Understood? So what is that to be compensated? Net profit plus insured standing charge. Together we call it as, so thereby what is the compensation? Gross profit on sales loss forever, lifelong. No. compensation period. What is compensation period? Indemnity period or interruption period, whichever is lower. What is indemnity period? The period mentioned in the policy. What is interruption period? It's a period affected by fire. It's a period taken to restore our normal business. I hope you understood.
Yes, sir.
So how to compute this? Sales lost into dash GPR. How to compute the claim? It is sales lost into GPR. What is GPR? That is what we have learned so far. GPR is equal to GP by sales into 100. What is GP? Dash plus dash. Net profit plus insured standing charges. What if there is loss? Then insured standing charges minus net loss into insured standing charges divided by total standing charges. Super. What if GPR already given? We can take that GPR raw. No. That is dash GPR, trading GPR. So we should find out separately our own GPR. Understood? Suppose some increase, decrease given. I should apply that percentage on percentage. No. Directly make the plus or minus. Depend upon is it increase or decrease. I hope you are following.
Yes, sir.
Pakka?
Yes, sir.
Okay, so let us now move on to the next discussion. Like I told you, what is the compensation? GP on sales lost. About how to compute sales lost into GPR. We have learned GPR. What is next? Sales lost. We have to learn how to compute sales lost. Right? So we are going to learn the computation of sales lost. It is the sales lost. Got last 30 minutes or so. I think we can complete this concept also, so that we get all the concept right. And maybe the next class only I will give you the written theories. Okay, so don't worry. We will definitely create a structure and steps and all. So now closely follow. Listen. Now no writing and all. Just follow. Sales lost. Insurance company will first ask you what is the GPR. I gave all evidence about GPR. Now they will ask you what is the sales loss. Can I tell some number what I like the most? How much sales loss you are asking? You are the insurance company and I am telling, sir, 5 crore I lost. You will accept?
No.
So there should be some basis of establishing that number. I can't simply tell some number which I like the most. So then I will tell like no, it should be generally based upon past. So how much sales I would have made if there was no fire, I have to prove. Correct? That is what I would have lost. What is the sales I would have lost? Whatever sales I would have expected after fire, whatever sales I would have expected after fire, if there was no fire accident, that is what I would have lost. Correct? That can be determined based on the past. I can't tell like, no, sir, if the fire did not come, 5 crore would have been my sales. How you say, I would have made, sir, my confidence. Like that you can't tell. It should be established based on the past. Understood? Yes, Appa, I am telling like, see past. Appa, but you are scolding me. Why you are scolding me? Because past, I am taking 12 months sales. Can I take 12 months sales? No, you should take sales during dash period, compensation period, which you already fixed. Dash date to dash date. By comparing two different periods, you fixed one period as compensation period. No, that compensation period you should take for the previous year. Understood? So, okay. So, which means I am affected only by 4 months now. I should take 12 months sales or 4 months sales?
4 months.
4 months sales of past. And I should tell if fire did not come, this would have been my sales. Correct? Sorry. Appo, imagine it happens to be like, no, I am taking, again, the 4 months sales I am taking and giving you, say it is 3 lakhs. How much?
3 lakhs.
3 lakhs. But still you are scolding me. You are taking my financial statement, you are analyzing and still you are scolding me. You are wrong, you are liar, you are cheat. Like that you are scolding me. Then I am asking why you are scolding and all. Sir, you asked me 4 months because I am affected by 4 months. For 4 months, so thereby I am taking from previous year 4 months. You are scolding. Why? You know, fire happened on 1st of August. 1st of August. And business affected for 4 months. 4 months. But when I took 4 months of past, I took December, March, June, and another month. Like that, I took 4 months. Why sir like that you took? Na, that month's sales was highest, like that I took. So then naturally you should scold, because you should take the same 4 months which you are affected. Just because of 4 months, not any 4 months, what do you like the most? So thereby it should be sales during the compensation period of previous year, corresponding compensation period of previous year. Sales during corresponding compensation period of previous year, which means August, September, October, November of 2020. Then you should take August, September, October, November of 2019. You should not take any other period sales. Oh ho ho ho. Abdina it took, it came to 2 lakhs. Earlier it was 3 lakhs. Ipo on the same 4 months I took, it came to how much?
2 lakhs.
2 lakhs. Apo you are asking, now what is the sales you have lost? You are asking once again. I am telling 2,40,000. Then again you are scolding. Now only I explained, either again you are scolding. Then now I am taking a reverse turn and I am started scolding you. You only not understanding my position. Just because of last year, this 4 months I made 2 lakhs. Do you mean to say that every year I should do 22 lakhs? Do you mean to say that every year I should not improve? It is not. It shouldn't be like some teacher scolding a boy just because of quarterly fail, half yearly fail. Can he presume that the student will never improve? So every person, every business will improve. Now I am telling the insurance company, come on, you are the insurance company, come on, see 2018, see 2017. So what happened is like so 1,50,000, 1,60,000 and it was 2 lakhs. So in this year, what do I expect? It was 1,60,000 and now 2 lakhs. Now what do I expect? 2,40,000. I expect 2,40,000. So there is some trend you should consider. You can't take the same sales. I hope you are following this. So thereby how to find out the sales lost? I have to prove how much sales I expect. The expected sales is based on past. So once again, sales during corresponding compensation period of previous year. Compensation period of 4 months. Corresponding the same period as it is. So once again, sales during corresponding compensation period of previous year plus or minus, sometimes minus also. Insurance company will tell, anyway your sales is keep on reducing, so we'll reduce the sales. So that way plus or minus trend increasing or decreasing, that you should identify. Which will be again how to determine that, sir, it will be mutually agreed. I can't tell some number. Again I have to prove with documents like my business is on the upswing. Understood? So once again, how to find out the sales lost? Sales during corresponding compensation period of previous year plus or minus trend will give you the expected sales. Will give you expected sales. Will give you the expected sales. From that expected sales, we should deduct the actual sales. Because, sir, what is actual sales? Sir, after 5 you don't make any sales, no. That I didn't told. I told that I will lose sales doesn't mean I will not make any sales. Sometimes I will make some sales. Some business will not make any sales. Understood? So there will be some sales if you make also. Still I would have lost sales. Yes, because my expectation was something different. Correct? In the 4 months, August, September, October, November, I sold for 50,000 rupees. But you expected 240, 240, 50,000 I made. Now 190 I lost. Like that you should compute. I hope you are following this. So that way, sales loss. How to calculate? How to calculate sales lost? Sales during corresponding compensation period of previous year plus or minus trend will give you dash. Expected sales. What does that mean? This is the sales I expected if there was no dash. Fire. If there was no fire, this is the sales I would have made. Now from the sales deduct whatever sales you could do because of this fire. Whatever sales you could do, that is called actual sales. And the actual, you already sold the goods. It is not that, see, are we computing this amount exactly on the date of fire or several months after fire? This month, this particular amount will be computing several months after fire. Loss of stock is computed on the date of fire. But this amount, only if your business position is restored or only if the indemnity period is over, this amount is calculated.
Yes, sir.
That is why actual sales and the interruption period, actual sales very much we know. That amount only we are deducting. I hope you are following this. So, loss of stock computation is different data, and this amount is only after the completion of dash period, indemnity period, then only they can understand this is the sales you have lost. Fire dately we can't tell what is the sales you are losing. Understood? So that way, visualize these concepts, then naturally we understand this particular concept, formula, etc. So sales lost. Let me write this. So what is the sales loss? Now listen, my dear friends. This sales loss in the insurance language, henceforth we call it as short sales. What do we call it as? Short sales. In the insurance language, we call this as short sales. Because earlier when we start learning, I was introducing the layman's words. Now slowly I am bringing the insurance terminology. Correct? Gross profit on dash. What is claim? Claim is gross profit on short sales. Gross profit on short sales during dash period. Compensation period. So thereby short sales. How to calculate now? It is sales during corresponding compensation period of previous year. You get some number plus or minus trend. What is this added number is called? Expected sales. During the actual indemnity period. This is the compensation period. Expected sales of the compensation period. Minus dash. Actual sales. Will give you dash. Short sales. This is the sales you have lost. But we technically call that as dash sales. Short sales. On the short sales, you should multiply by dash. GPR as you originally computed. So that will give you gross profit on short sales. This is the amount.
Yes, sir.
If you technically analyze, first thing is you identify the dash period. Compensation period. Then you compute the GPR. Then you compute the short sales. Then the claim, which is dash on dash. GP on short sales. Understood?
Yes,
like that again the 4 steps comes. Step number 1. Compensation period. Identification of compensation. What is compensation period? Indemnity period or interruption period, whichever is less. Though I am stressing importance to this terminology, but in the questions most of the times they will give only one period, so that period straight away becomes a compensation period. But still you can write step number 1 and mention that period. Even though you don't have 2 period, but still you can mention that period. Understood? Okay, so that is compensation period. Then you have GPR. Proper analyze money, you should compute the GPR. Just because the GPR given don't take. Because that GPR is dash GPR. Trading GPR. We may have to find out the GPR for this policy. Then we should take up this particular short sales. Henceforth, slowly we are evolving into the new terminology. Short sales. So how to compute short sales? Once again, sales during compensation. In a compensation, corresponding compensation period of previous year. August, September, October, November, na August, September, October, November of previous year. It is not 4 months, no 4 months. Same 4 months should be. That is what we call as corresponding compensation period of previous year plus or minus trend will give you dash. This is what I expected in the current year, sir. Based on previous year, this much. I expect increase this much. So I expected this much. But I could do this much only. We call it as actual sales. That you deduct. You will be getting short sales. I hope you understood this.
Yes,
okay, so simple. So what I will do is that I will take one problem. I will take one extra question, an additional question for you to solve to understand about the short sales calculation. and then we will move into the further problems onto the study module, right? So today I will give you one extra question, okay? So listen carefully. An additional question. A fire occurred. A fire occurred in the premises of Flames Limited. When I write these names, your school days memory will come. So when I say flames, means it is that no, out of fire whatever comes, that flame only. It is not you writing two names and striking of something and making the comparison. It is certainly not so. So don't think anything else. It is the fire flame. Okay, a fire occurred in the premises of Flames Limited on 1st of June 2020. So June 2020 we can write anything, because everything that comes na immediately we will tell. This also in 2020 account, that includes so pathetic Indian cricket team, the test match, it is whatever they perform, anything that happens, no, I don't know. Anyway, we are going to now 21, so 21 will be extremely a happy year. A fire occurred in the premise of Flames Limited on 1st June 2020. Okay. From the following, before that, indemnity period. Indemnity period is 5 months. Interruption period is 4 months. Indemnity period is 5 months. Interruption period is 4 months. From the following, I have already told you, I will take some time to construct some problems in the classroom, my dear friends, on an extempo basis. So you have to bear with me. From the following additional details, it's for you to solve, not for me. So from the following additional details, compute the gross profit on dash short sales. Is now the basic question. Now inputs are going to be ready, my dear friends. Okay, so listen carefully. Sales for the period 1/6/2020 to 30/11/2020. 30/11/2020 is rupees 2,50,000. Sales for the period 1/6/2020 to 31/10/2020 is rupees 2,10,000. Sales for the period 1/6/2020 to 39 2020 is rupees 1,60,000. 1,60,000. Sales for the period 1/6/2019 to 30/11/2019 is rupees 5,60,000. Sales for the period 1/6/2019 to 31/10/2019 is rupees 4,80,000. Sales for the period 1/6/2019 to 39/2019 is rupees 4 lakhs. Is rupees 4 lakhs. My dear friends, you might be wondering like, no sir, why this many sales given? I will give. You need to identify what is the relevant sales. Mostly in the examination question, unnecessary details generally won't be there. So there will be mostly relevant information. But having understood the concept, you should identify a period properly, no? So thereby I am giving you sales of different period. You choose which is appropriate, right one. So you need not be really wondering like, no, should I use all this information? You didn't tell only. So you should take only the relevant information. Okay, so take only relevant information, my dear friends. So sales for the period. So like this I have given. Now once again, sales for the period 1/4/2019 to 31st March 2020 is rupees 12 lakhs. 1/4/19 to 31st March 2020 is rupees 12 lakhs. Then gross profit ratio of 1920 is 40%. Is 40%. Net profit of 1920 is rupees 1,80,000. Rupees 1,80,000. Then it is 70% of standing charges, total standing charges were insured. 70% of total standing charges were insured. Then one more point, my dear friends, increasing trend for sales agreed at 10%. Increasing trend for sales agreed at 10%. Like this information. So this is not a problem just for computing short sales. You are supposed to compute what? GP on short sales. We already know how to compute GPR. No. Fire occurred in which year? 2020-21. Upon previous year 1920. So previous year based computation you should do. Understood? So GP on short sales. So step number 1, compensation period. Step number 2, the GPR. Step 3, short sales. Step 4, GP on short sales. Like that you should calculate. Our question once again, my dear friends, it is, we will just show this particular question for copying. I hope you are copying. Copying slide number 2. Copying slide number 3. So I have provided all the information. Already question is very clear. Compute GP on short sales. Now what you should do? Don't expect me I constructed so much of time I spent for you to solve the problem. Stop the video. Solve the problem. So I can't wait for that many time. No. Take 5 minutes. 10 minutes also you take it. You can complete it. So 1, 2, 3, 4 like that. One compensation period this date to this date. Like this you can easily calculate. Please calculate. Okay, so try for 10 minutes, arrive at the answer. Let us now solve. Hope you are arriving at the answer. Completed. Don't wait, no. Even if you are not understanding one step, still proceed to the last part. GP on short sales, I need you to want you to complete that. Okay, so welcome after that 10 minutes. Welcome after that 10 minutes. So listen carefully, my dear friend. Solution. Solution. Step number 1.
Compensation period.
Compensation period. Okay. Now listen carefully, my dear friend. Answer to this particular question to be continued in the next class. We'll continue this particular question, answer in the next class. So maybe immediately you will go and view this particular lecture and all. We'll see how you have arrived at the answer and all. Thank you. We'll meet in the next class, my dear friends.